Hello everyone, my name is Senzo. Please make sure that you are subscribing to the channel if you haven't already. And please just make sure that you share this content with some of the people that you have in class or the people that you study with so that everyone can, get better. I try my best to explain things as clear as possible. So I think a lot of people will benefit from this. And in the video that we're going to cover here, we are going to be looking at the financial statement of financial position, and we're going to be looking at question 3 of the November 2024 paper, the Eastern Cape exam. So without further much to do, let us jump straight into the question. As you can see, a statement of financial position and notes. Okay, cool. So this is probably going to be a short video because we're firstly just going to cover the trade and other receivables. And then after that, we'll look at equity and liabilities. And then we'll move to 3.2 in the following video. So make sure that you stay tuned and you will find that next video, depending on when you watch the video, but I'm sure you'll find it in the playlist below. So let's get straight into it. So what does it say? It says the following information relates to teeny tawny traders for the financial year ending 30th of September 2024. So you need to prepare the trade and other receivables note, and then on top of that, you need to prepare the equity and liability section of the statement of financial position. All right, cool. So one of the things again that you firstly look out for when doing this is you just go quickly and check your answer book. Now, if I look at this answer books, particularly for trade and other receivables, there's many things that go in there, by the way, but you can kind of see that there's 1, 2, 3 lines that you can write in. Typically, if there's 3 lines only available, that probably means you have to use two, but it's not a rule set in stone, but in general, from what I've observed, because I've done so many past papers. But let's look at the information then. So let's use our Excel spreadsheet here. So I'm going to use a brand new set of sheet, and then let's go. So question 3, and then we have 3.1, and then 3.1.1. So we're going to be doing the trade and other receivables. Okay, so normally we start with trade debtors, and then after that we're gonna have provision for bad debts. Now, key thing here that the provision for bad debts we're talking about is the one that would have recently calculated, not the provision for bad debts adjustment, but the recently calculated provision for bad debts. So very key difference. And then if you say trade debtors less provision for bad debts, we then would get our net trade debtors. Now that pretty much would probably take away everything that you have to, it takes away all the space that is in the answer book. So we'll probably just skip the provision for bad debts. Now this also depends on the information that we've been given, because if there's no provision for bad debts, we can just go straight to trade debtors, and then we look at the other things like accrued income, prepaid expenses, and then also looking at maybe if we have any deposits that have been made but yet to be fulfilled. So there's some of those things that we can look into. All right, so let's look at the information that have been given. So it says the following balances appeared amongst others in the general ledger on 30th of September. Okay, as you can see, there's no provision for bad debts here. And in the adjustments, it's only 3 of them, and none of them are talking about provision for bad debts. So that's why I took it out. So let's see then. So we start off with trade debtors from 85,800, as you can see in the answer sheet as well. So we're going to start with 85,800. And then let's look at maybe some of the things that may affect our trade debtors. Let's look for that information. So let's see. So this is the list of balances. So let's go. It says the debit balance of a sign 800 in the debtors ledger must be transferred to their account in the creditors ledger. Now, if someone has a So as it says, a debit balance of 800 must be transferred into their creditor's ledger. Well, if someone has a debit balance that you need to transfer, key thing, debit balance. So to transfer a debit balance, you basically need to credit. So we would need to credit our debtors. Now, crediting our debtors means what? Means that we are decreasing our debtors because our assets increase with the debit and they decrease with the credit. So that 800 right there that is being transferred to the creditor's ledger would basically then be subtracted from our trade debtors. And then let's go and see if there's other information. The loan from AMP Bank was originally received and was repaid, blah, 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 blah. The contributed additional equipment of value, whatever. No. So that's pretty much all that I'm seeing that affects, the trade debtors. Uh, so then from that perspective, so we're gonna have our trade debtors sitting at 85,000. Okay. The next thing that we need to look out for, we need to look for like prepaid expenses, deposits, as well as accrued income. So let's see what we've been given here in the list. So number one is accrued income, very clear, and it's given as 1,200. And there's no information that may be suggesting that we need to make any sort of changes. So accrued income is going to be worth 1,200. And then let's see if there's anything else that we can find. Prepaid expenses. No, we don't have prepaid expenses. But what we do have is a deposit for electricity. Now, a deposit basically works like this, right? If you pay a deposit, you pay a deposit because you haven't gotten what you are requesting. So the business in this case would have paid money as a deposit so that something can happen. So it's not common in terms of electricity, but it's common maybe when you go to, let's say maybe you want to design your matric dress, right? Or your matric suit if you're a guy. Now, what you do there is that you would go to someone that is a tailor or someone that's a designer, and then you tell them, this is what I want to design. And then they'll give you the price that, well, it's going to cost you 5,000, but then 2,500 must be paid up front. So then in that case, that money that is being paid up front is receivable until such time that that dress or that suit is complete. So then in this case, we would have our deposit for electricity for 620. And then I don't see any prepaid expenses given here. There's income received in advance, but that falls under trade and other payables, not receivables. And so the total then for our trade and other receivables would work out to 86,820. So that's how we would do our trade and other receivables. Obviously, we should still be able to do a full note with the provision for bad debts and all that, but that wasn't necessary in this case. I just wanted to show it a little bit so that you guys still have an idea of how to do a full complete note. All right, the next question is saying that we need to prepare the equity and liability section of the statement of financial position, 30th of September 2024. Okay, now when it comes to the equity and liability section, well, we're going to start with our equity, right? And now we know that we're dealing with partnerships. So in partnerships, our equity consists of capital and it also consists of current accounts. So let's see then if we can be able to get these capital balances and then as well as maybe the current account balances of these partners in particular, and then also consider the additional information. So as you can see here, you can see that this is 30th of September 2024. And you see these capital balances that are given. Specifically, it says that these are actually on the 1st of October 2023, which would be the start of the financial year. So 210,000, 230,000, and then there's this information here that says Tiny contributed additional equipment to the value of 40,000 into the partnership half through the year, no entries were made in the books for this. So when we add up, we also then will need to add up this extra 40,000 here. So you're going to have 210,000 plus 230,000 plus 40,000. So 210,000 plus 240. 210,000 plus 230,000 plus 40,000. So that gives us our capital account to be 480,000. Then we proceed to the current accounts. Now, as it relates to the current account, you can see one partner has a current account of 15,600 credit, as it should be. That means that they have a positive current account balance. But then Tony, he has 3,600 debit, which means it's negative. So our current account then in this case is actually going to be, let me just make these a little bigger. So our current account is going to be that 15,600, and then you would subtract the 3,600 for the fact that the other account is on the debit side. So our current account adds up to what? 12,000. And then what we do is that we would add up our equity. Then after that, we will move to the liabilities. So let's have a look at our liabilities then, starting with non-current liabilities. So non-current liabilities typically just have one all the time, and that's typically just, the loan. So we need to figure out the short-term portion of the loan as well as the long-term portion of the loan. So current liabilities, we'll do that. So we start with the trade and other payables, and then after that we'll do the short-term loans, bank overdrafts, and all of that. Okay, cool. Let's start quickly and sort out the loan. So looking at the loan, we are given here a loan from AMP Bank, which is 180,000. And then what does it say? It says that the loan from AMP Bank was originally received on 1 October 2022 and was repaid in equal installments over 5 years. Repayments were made and recorded. Interest is not capitalized. Okay, that makes things a bit clear. So in this case, we go with the timeline, right? Because we can see that it was taken on 1 October 2022. Now, key thing about 1 October, specifically 1 October, forget the year, is that is when our financial year starts. So then in this case, if we look at this loan, so we have 1 October 2022, the loan is taken, and that loan is question mark. We just know how repayments are going to happen. So what does it say? They say it will be repaid in equal monthly installments over 5 years. The payments are not to date. So let's look at let's look at the end of the previous year, because if the year starts on 1 October 2022, then it would end on 30th of September 2023. So 30th of September, so I'll say 1 October 2022, because these are monthly payments, to 30th of September 2023, we have payment 1. So I'm just going to lump those payments. We have payment 1, and then from 1 October 2023 right up until the 30th of September now, 2024, then payment 2 would have occurred, right? So payment 2 would have occurred, and it says here that repayments were made and recorded to date. So if they are recorded to date, we know that the balance on 30th of September 2024 is 180,000. So I said payment 1 and both, but the second one is payment 2. So if you have made these payments over 5 years, so year 1 you make your payments, year 2 you make your payments, that means that you have 3 years of payments remaining at 30th of September 2024, and you got a balance of 180,000. So, and this 80,000 then, since two years of payments have been made, that means that you have 3 years of payment remaining. So then that means that how much are we paying off this loan per year? Well, we can take the balance and then we can divide it by 3. So that means that the next payments that are going to be made in the years that are to come, it's going to be 60,000 a year. 60,000 a year works to 5,000 a month. And therefore, that means that 60,000 is now the short-term loan, because the next 60,000 is going to be paid in a period of a year or less. So the short-term loan is going to be 60,000, and our long-term loan is going to be 180,000 minus 60,000. Okay, cool. And therefore, your long-term loan, non-current liabilities, works out to 120,000, which you would make sure to total up. And then after that, we then move to our trade and other payables. So trade and other payables, let's have a look. So trade and other payables, we know that we start with our creditors control. So what is our creditors control? That's one thing that I'm going to look out for first. 79,500. Okay, and then after that, we're going to look for prepaid expenses, not prepaid expenses, sorry, accrued expenses. And then we're going to look at income received in advance. And then we're going to be looking at the other things, including, your SARS pay as you earn, because those things are payable. And then we also will get to look at what else in this list? The pension fund. And then the other thing that is going to be important that we also need to pay attention to is that 800, because this 800 is being transferred from debtors to creditors. So it's a debit balance of a debtor. As we said, that when there is there's a balance, which is now it's a debit balance in this case. So to transfer a debit balance, you credit. So which means that what do you debit? Well, you debit what you're transferring to, and you're transferring now to creditors. Well, a debit of 800 means that you're debiting a liability when you're debiting creditors control, and a debit and liabilities means liabilities are being decreased. So we're going to start with that 800 and just subtract it. As you can see, we subtracted it on trade debtors as well. Now we have to subtract it when we're doing the trade and other payables. Then after that, let's go and look at the next thing. So firstly, SARS pay as you earn is 3,980. That is still owing. So 3,980, it's going to add to our payables. And then next, deposit, no. Accrued expenses for 450, yes. So we're going to say plus 450 for the accrued expenses. And then the next thing that we're going to be looking at is the pension fund. Again, you would deduct money from your employee for pension fund, and then you have to owe that money to the pension fund company. So then in that case, we would add another payable, which is 1,210. And then finally, we have income received in advance, which also forms part of our trade and other receivables. And so we'll also add up the 990, close the bracket. And then we can see that it would work out to what? 85,330. And then let's see if we have any other current liability. One that I would look out for specifically is going to be the bank overdraft. So do we have a bank overdraft? Well, yes, we do have a bank overdraft, because as you can see that in the list of balances, we have bank and it says credit inside the bracket, which means that This is an overdrawn bank account, so that would be 5,250. Also part of our liability, so bank overdraft, 5,250, and then there's no more other liabilities, and so we can add. So our current liabilities would add up to a total of 150,000, 580, and then to complete this, we would have to say total equity and liabilities, because that's the only part that we're doing from this statement of financial position. We then would need to add our equity, which is 492,000, plus the 120,000, and then plus the 150,000, 580. Okay, cool. And then again, guys, just to remind you of something that I've been saying for a while. Firstly, the total 86,820, that would be correct no matter if the amounts that you got here are wrong, because you would add those wrong amounts to at least come out with the total. Okay. And then secondly, here, equity, this amount needs to be correct as well, because even if you have a wrong capital and you have wrong current account, the fact that you add them together gives you the method mark. And then again here, total of non-current liabilities, the fact that you put in the right total, you get a mark. And then also the total here of current liabilities gives you the total mark. And then adding everything up to then make up your total equity and liabilities, that is another framework. So there's so many method marks that you can get that you don't need to know anything other than just to add certain things. So yeah, so just make sure then that you take advantage of some of these marks, because it doesn't take a lot to basically figure this thing out. So stay tuned now. In the next video, I'll be doing 3.2 of the same question. So stay tuned. Cheers for now. Catch you on the next one.